We check from the raw materials to the end products. Then we package the flour ourselves, we load them to the clean and safe trucks, and we do deliveries to our customers. Our aim is to make quality products and to ensure our customers are satisfied to the fullest.
KCB has been one of our biggest and very reliable bank business partners, and our relationship started back in 1999 when we were expanding our business and infrastructure. The reason why we chose KCB is because they had secured the market early. They were doing issues to do with trade financing, asset financing, and therefore we found a good finance partner in terms of satisfying customer needs and being able to be proactive in terms of responding to our business needs. In terms of service, they have been offering us various products, beginning with trade finance in terms of import finance that has enabled us to be able to pay our bills through KCB.
Right now we do KCB Mtaani, especially with our sales trucks, where our salesmen deposit cash to the KCB agents Mtaani, and it's very efficient. And they've been flexible, and we have no problem so far with that.
Whenever we need expansion in terms of business growth or opening new business, we have been looking upon KCB because they have very reliable loan facilities and overdraft facilities. We've been able to approach them to implement new business technologies in terms of milling, in terms of packaging products, and also opening new branches.
To not hold out opportunities. Those are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take those to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And those that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu.
KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Those are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take those to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And those that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu.
KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors.
I started looking at so many aspects of education in the education industry. And then I gave birth to our last born, who had some challenges in terms of learning disabilities. And because of that, I could not find a school which could accommodate her with her disabilities. And that is when the passion of starting Olivine School came from. Actually, the name Olivine is for our daughter. She was the pioneer of this school. And we started it purposely for ensuring that we do what we call inclusive learning, where we include all the children despite their neurodiverse challenges. When I started this journey, I used to bank with a bank, and it came to a point where I really wanted to go higher. And that is when I decided, let me cross the corridor, and I joined the bank which could listen to me, which could open those opportunities for me, and which also could guide me and listen to the vision I had and hold me by their hand and bring me out so that I'll be able to roar in the market area. I could not be where I am now in our new location if it was not for having strong partnership, especially financial partners who are KCB, who are able to come in when we were at our lowest and started working with us until to the level whereby they bought for us the facility. They were able to put up the first phase of the construction of the school for us. Last year, during the Flame dinner, I was privileged to meet with the leadership of the bank, where I met amazing women. We appreciate the lending hand which KCB gave, especially when they reached out to our children who are the Cubs, and brought in the initiative of young golf for the young children, and the issue of chess and even football. They were able even to donate so many items for our school. What I can tell all entrepreneurs who are in this industry, I am a living testimony of the doors which KCB has enabled me to venture in through their many products, especially the Flame for the women.
To welcome us all into this event. I also want to take the opportunity to also thank all those who have come and have also taken their time to wait. I just want to give you thanks, and you can all give a hand to ourselves. Let's give a hand to ourselves. So the program for today also is not going to be long, brief. And today we are going to be releasing our full year results for 2023. And as is the norm, we normally have our shareholders who are here. Let us give them a hand. We also have our investors who are here. Let us give them a hand. We have our KCB Group board, which is here. Let us give them a hand. We also have our KCB Executive Committee and Group Management Committee. Let us clap for them. We also have the members of the media who have made the time to come here. Let us clap for them. And then our colleagues. Let's clap for them, our colleagues. And then we also have our online viewers who are also following us this evening just to listen to these announcements of our results. So we have online viewers from YouTube. Let's clap for them. From Zoom, let's clap for them. LinkedIn, let's clap for them, and also Facebook. So actually we have a large following behind us, and so as we start this program this evening, I'd like us to start first with the national anthem. We shall start, let's stand up. So we shall start the national anthem. First we'll have the Kenyan national anthem, which will be sung, and then we shall go to the East African national anthem. Then we shall do prayers, and then we'll take our seats. So over to you, Tim.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike, umoja wetu idumu jumuiya yetu.
Let us pray. Our Father and our God, we want to thank you for this evening, for the privilege that you have given us to be here once again, to be able to discuss our full year results. We ask you, Father, that you give us the wisdom, the knowledge, the understanding, so that everything that we shall discuss this evening, Father, will give you glory to it. And we ask you, Father, for all the blessings, and we ask you, Lord, that you continue to guide us, even as we look ahead into this year 2024. In Jesus' name I pray. Amen. Okay, let us have our seats. So for today's session, for the sharing of the full year results 2023, this will be led by our group chairman, Dr. Joseph Kinywa, who is with us this evening. Let's give him a clap. Also to be led, also thereafter will be our group CEO, Paul Russo. Let's give him a clap. And then thereafter, we shall be led by our Group Finance Director, Lawrence Kimathi. Okay, so to start off our program now, I'd like to invite our Group Chairman, Dr. Joseph Kinywa, to come in front so that he can give us his remarks. And thereafter, Paul will come over, and then Lawrence. Thank you.
Very good. Good afternoon once again, ladies and gentlemen. Hamjambo. Si tumekula lunch not too long ago. Yeah, okay, so group board members that are present, group CEO, Paul Russo, senior management team and staff, stockbrokers, investors, analysts, and fund managers, our media partners, ladies and gentlemen, good afternoon once again. On behalf of the group board of directors, I'm really delighted to welcome you to this ceremony as we release the 2023 full year financial results. Thank you for finding time to join us today, physically or virtually, as we reflect on our performance for the past 1 year, while we also give you an overview of the focus for the year ahead. Before I proceed, I wish to thank all our stakeholders, shareholders, customers, staff, regulators, and other partners for their unwavering support and trust in our business over the years. KCB would not be the regional powerhouse bank that it is today without you. You are the bedrock of our success, and for that reason, we have every reason to salute you. I acknowledge the directors of the KCB Group Board and subsidiaries for their dedication, continued commitment, and support in providing oversight, governance, and effective leadership to our business. May I request those who are present today to stand so that we can also appreciate them. Please, board members, if you can all stand for a second. Stand up. Thank you. You can see it. In the same breath, allow me to really thank the group leadership team led by the group CEO, Mr. Paul Russo, for diligently steering the ship and ensuring that we deliver value to our stakeholders. I do believe everybody knows Russo, but just in case, you can start for a second. Thank you. Thank you, Paul. Last year, ladies and gentlemen, this team did a lot of heavy lifting to help the business navigate the environment. As a board, we are convinced that given the capabilities and commitment of our management team and the tough decisions we have made in 2023 will ensure that we sustainably deliver better results beginning 2024 and in the future. Our commitment to our vision for people for better, I want to assure you, remains unshaken. Ladies and gentlemen, before we get to the results, allow me to work on 4 issues that I feel we needed to shed light on, which have been and are central to our business. First, looking at the operating environment in 2023, it is shown the East African region faced headwinds arising from increased currency depreciation, higher interest rates, and inflation, among other factors. All these factors had significant impact on corporate and retail customers, and as a result, it did affect overall business performance across many sectors, including KCB Group. Secondly, our investments in the regional businesses continued to bear fruits. The subsidiaries recorded impressive performance, delivering over 36% of the overall profit after tax and 35% of the total group assets, with TMB in DRC and BPR Rwanda emerging as star performance. They did so well, and we are proud for them. We consider the markets outside Kenya as anchor pillars to our Pan-African expansion agenda, which seeks to leverage our banking experience over essentially in delivering world-class banking products and service to a diverse range of customers. Third, in the past year, we took a deep dive into KCB Bank Kenya to deal with legacy issues and position it better for prospects. I'm happy to report that this has led to a positive turn, as will be shown in the financials later. On behalf of the board, I would like to confirm that we are happy at the progress being made on the Kenyan business front. Ladies and gentlemen, as you will recall, in 2019, KCB Group took a bold step and acquired 100% of ordinary shares of National Bank of Kenya Limited. The move essentially put NBK under the ambit of KCB Group, where it became a full-fledged subsidiary. Over the past 4 years, we have made progressive investments in the bank. Regrettably, some significant legacy claims have eroded all the gains that we had achieved. Fourth, we have continued to embed sustainable practices in our business operations and strategy. Our group is well aligned to drive green finance and accelerate our net zero ambitions, while also supporting our citizenship agenda to deliver meaningful change in our communities. Overall, even in the face of a challenging and volatile business landscape, we steadfastly remained focused on delivering value to our stakeholders. Looking ahead, we are bullish about year 2024 and going forward, and are gearing up to maximize on all the opportunities that are available in our various markets. We have in place a robust 2024-26 strategy, which I know we did mention the last time we met in a similar kind of a forum, the name of which we are calling Transforming Today Together, that enables us to prudently deploy our capital and resources across the region to ensure superior returns from our investments. We are confident that KCB Group's strong financial position will provide a solid base for the group to meet its ambitions. I thank all our employees across the region for their dedication and zeal that has continued to deliver impressive results for the group. Allow me at this point to call up Paul to present an overview of the performance. We will later take questions you may have and which you may want to ask. Otherwise, I really appreciate and thank you once again, and God bless all of us. God bless KCB.
I think it's still afternoon, right? Good afternoon, everyone. Thank you, Chairman. I decided this time to come up digital because we upgraded your papers, Chairman. And I'm glad today they were high-quality papers. Thank you. Thank you. Just that on a light note, I'll speak about an update on the strategy, and then Lawrence will come in and speak about the numbers, as well as then avail myself with the chairman and Lawrence for Q&A. May I ask the group leadership committee members that are here to just stand for introduction. Group leadership committee members. You're doubting yourselves? Yeah? I'll try and save time, so I will not introduce you guys by names. But for whatever results that we release, I just want to make sure that everybody who is watching and following and in the room knows that this is the team that is responsible. So Niarambe, please have a seat. Thank you. I just want to talk about, I have a number of slides, but I'm also aware that Chairman, a number of people are saying, Paul, just go quickly to the headline of BD today. And clarify that, then we move on. I'll come to that, so please just be patient with me a little bit. The operating environment, strong GDP growth across the region in 2023, and you can see that how that has reflected in the growth of gross loans growth for KCB. And truly, as the chairman said, reflects the performance of the regional businesses and starting to show why KCB made investments in the region. So sustained resurgence post-COVID, strong rebound in agriculture. And I think if you just look at the performance for some of our entities on gross loans, fantastic growth. Even in Kenya, where we've had our own challenges. A 23% growth in gross loans is not a small number. So a round of applause for the team that has been driving those results. When you look at operating environment, I don't want to belabor the obvious. Rise in interest rates has been a significant issue, and particularly in some of the markets that you can see what has happened in DRC. And Kenya. But at the end of the day, what is also still interesting is that, if I'm not wrong, for Kenya, private sector credit grew 13.9% in such an environment. We're still positive that the actions taken by the regulators in the market in tightening, particularly in Kenya, will come through for us. But I need to point out for the first time the cost of funds, because of liquidity pressure, did start ticking up, and it's something that we are monitoring as KCB. Still on the operating environment, depreciation of currencies. I think when we spoke in September, and Lawrence will speak to this in details with the devaluation, particularly of the Kenya shilling, that had meant that we needed to take significant hit, particularly on dollar-denominated facilities. The current strengthening of the Kenya shilling gives an upside, but we were prudent in 2023 to make sure that we made sufficient provision on that. And I will not want to go into the detail, which Lawrence will go through that. I think we are seeing a significant strengthening of the Kenya shilling, and that gives us a strong upside. Again, still looking at the operating environment, don't want to waste quite a lot of time here, but to point out a few things. Even as the balance of payments deficit, was narrowed, I think we still have pressure on exports, particularly for a market like Kenya. Bit of pressure on tea, coffee, largely because of Pakistan, if I'm not wrong, and Iraq. And I think there's also pressure on the Egypt side. But I'm glad I sit in the National Investment Council and have visibility of some of the actions that are being taken to try and address some of those challenges. In terms of delivering our 2020 to 2023 strategy, so we had a 2020-2023 strategy beyond banking that came to a close. Like I said, we now are into another period of 2024-2026. We dub that strategy Transforming Today Together. Transformation, which is a complete change, today delivers a sense of urgency. Together means it's a collective across the group. Each of those elements in those strategic thrusts, and I'll speak to them just quickly to show you what we've done in 2023, and then I'll touch later on 2020-2023, and I'll touch later on 2024-2026. Our purpose remains for people for better in everything that we do, in every person or soul that we touch. We will leave them better. We will do that by being closer, by being connected, and by being courageous. Closer means we will be building meaningful relationships. Connected means we will enhance technology across the group and also build intergroup capabilities. And courageous is for our people to be bold to step out for the customer. We had 4 key pillars and strategic thrusts, and just to highlight some of the things that we did around that. Customer first with leading value proposition. I think I would not be wrong to say we've had some stability from a technology process. And sometimes when you have a platform like this, as a CEO, it's important to acknowledge Dennis Volemi, who joined us as a Group Director Technology, working with his team. Thank you, Dennis, for the progress that you've made with your team to give us stability and remove the pain points for our customers. And we do have a bold strategy to now go to the next level. So 2023, I said to Dennis, don't do anything new, my friend. Just get us stability. You will dream in 2024 to 2026. We are number 1 retail bank, over 115 billion loans just to women-owned enterprises. Over 100 billion in loans to MSMEs. What I always say, particularly in Kenya, even with the hard cleaning up group chairman in Kenya, I dare say we're still the number 1 bank. And I said to the team, just imagine what then happens after you've cleaned up. It's deliberate. It is, you take tough calls for the future. In terms of corporate bank, which has had a massive hit on those provisions, which we'll talk about later, 3.4 times growth in trade finance to Kenya shillings 526 billion in 2023. But I also said to John Okulo when he joined, who is the director of KCB Bank, Kenya Corporate Banking, to build a sustainable bank, you need to build new banking relationships. 171 new to bank corporate banking relationships in that period. Thank you, John, and thank you to your team. When I look at mortgage, KCB is the #1 bank in mortgage. Many people will know savings and loans. Sometime within this strategy of 2023, we decided we are breaking down mortgage division and put them under different functions. I want to say today we've taken 360 degrees. Only a fool does not change their mind. We've now reestablished the mortgage division. And please don't ask me whether we are going back to SNL, but I appointed Caroline Wanjeri to look after that portfolio. And thank you, Wanjeri, for the work that you and the team are doing. So we've got that opportunity to drive a significant change in the mortgage division. Strategic thrust #2, and you can sense I'm moving a little bit fast. When I spoke sometime in September, we said we will have NBK, and I'll speak later about it, on the same core banking system as KCB Kenya and the rest of the group. You know, today, NBK smoothly, and thank you, George, to you and the board of NBK for the smooth transition into T24, effectively making us being able to realize what we've always been trying to achieve, despite the headline and what I'm going to speak about later. BPR upgraded to the latest version of Terminus, and I've settled that. Patience, I saw you somewhere. Thank you to the Rwanda team for the work that you've done. We're building and enhanced shared services. We're very clear that, that should give us savings, and we can see, 4.5 billion savings in the past 3 years. And thank you, I saw Jacqueline, the acting Group Shared Services Director, for that push, working with the NBK team. Automated over 64 processes, credit turnaround time down to 4.85 days, implemented branch excellence across the network. But most important, we added 2,000 plus new jobs, new. When you see the total for KCB, new jobs would probably be around 4,500. That is because of addition of acquisition of TMB and so forth. But over the group, 2,000 new jobs, specifically for relationship management, sales, technology, and digital channels, which reflects areas of growth and areas of improving customer experience in relationship management. Strategic thrust #3, pardon me if I'm moving very fast. 1 is because of time, 2 is because I come from the north and we speak very fast. So I just want to take advantage of those two. Strategic thrust #3, digital lender, digital to the core. 99% of our transactions conducted outside the branch channels. I think that we've said a number of times. Year on year, 73% growth in mobile lending. You'll see mobile service looks down, but that's actually because of introduction of charges and people moving to other services. Agency banking up 10%, merchant and POS up 44% year on year, internet banking up 47% year on year. But look at that number, 712% up in the period of the strategy plan. And I'm glad again, BPR, this is your time to shine. You've gone into how many channels, and I'll mention later, and that gives us opportunity to do a lot more. ATMs still puzzles many of us. It's going up by 5%. An indication in some instances that we are going back to cash. Strategic thrust, again, just looking at that, mobile service up by 23% year on year. In terms of just the value of transactions, again, a very good story in terms of what we've been doing. And that gives us the basis to be able to give Dennis the space to dream about what to do next. Because we've got to ask, what is the KCB of the future? And that conversation is already happening. If I move on swiftly, 78% growth in unfunded income from digital channels in 2023, largely driven by mobile banking, agency and merchant POS, internet banking, as well as ATMs. It is one of those areas that we want to build on. Strategic thrust number 4, looking at building scale. And you'll see when we talk about the performance of the new kid in the block, TMB, showing that we made the right decisions in those acquisitions and we can accelerate quickly. 38 million customers, 594 branches. And I know people will always tell me, Paul, but you have too many branches when you're moving to digital channels. We've got very good footfall into those branches. And at the end of the day, looking to see how we can use those for relationship management. Over 1.1 million agents and merchants. Scaling regional reference. I think if you just look at the growth of our subsidiaries outside of Kenya for that period, in total asset, cumulative, growth, 6.2 times growth in total assets between 2019 to 2023. In profit, we've moved from 2.8 billion Kenya shillings to 21 billion Kenya shillings, reflecting that with the right focus on the subsidiaries. And like I said in September when we're releasing results, for September results, it starts to show that we made the right decisions. When Kenya, one country, comes under pressure, the rest of the entities will show up. When I look at the strong sustainable revenue growth, if we look at each of those entities, year on year, Uganda grew 54%, Tanzania grew 52% on revenue, South Sudan grew 37%, Rwanda, despite the change in systems, and we think we lost a Q1 mostly, 15%, Burundi grew 9%. We did only have TMB fully in 2023, but the records on numbers in 2019 was there. But year on year, TMB grew 69% on revenue. We have non-banking entities that sometimes don't get notice. KCB Insurance, Bank Assurance Intermediary. We have KCB Asset Management, KCB Investment Bank, grew 27% on revenue. You can see the pressure on KCB Kenya growing 6% and NBK down at 2%. So very strong, sustainable results across the group. If you want to talk about shareholder value, the number of instances, we have to look at that. We grew shareholder equity by 76% to 228 billion. And that was just 130 billion in 2019. In the past, we've paid cumulative dividend of 19 billion since 2020. I think what is very important is that all this growth and sustaining subsidiaries has been organic. 85 billion in additional core capital since 2020 in terms of funding growth, to fund growth and acquisitions. For our employees, we added 4,700 new roles. That's what I was talking about. 2,000 of that are new roles away from acquisition. We are 51% female, and we are up from 44%. What I think is sometimes people see voluntary early leavers as bad news. Nobody had any bad news. When we released 362 people, we did not appear in the media. In bad sense, it's because KCB does take care of people as they leave the organization and values them. We've moved up organizational health index to the top decile from 79 to 80%. Driving sustainability, grew proportion of green loans to 15%. We're still targeting 25%. We've committed to net zero carbon emitting company as a carbon emitting company by 2050. We've screened loans of 1.1 trillion. When we were reviewing these numbers, I said 300,000 seedlings is not anything close to what we want to do. So Rosalind, this number has to be times 5 by the time we make the next commitment. I think it's important, we've continued to champion support for our communities and the communities that we operate in, and I'll not enumerate each of them. We pay taxes. 47 billion is not a mean figure. We have consistently been ranked leading financial institutions in the continent. I'll let it be there, but the one that I need to point out is the Bank of the Year 2023 for KCB Kenya and for DRC TMB. A round of applause for those businesses. I will leave the rest because they'll be available, for when David posts this out. I want to just take 2 more slides, if I'm not wrong, to talk about 2024-2026. As I said, we have a new, strategy for 2024-2026. We've dubbed it Transforming Today Together. Total overhaul, sense of urgency, sense of collectiveness. We've built it around our purpose, for people, for better. We are prioritizing 8 areas, 4 pillars, and 4 enablers. I've preached many times, and I'll go out of the way to build customer-centered value proposition. We've got to get KCB to have customer at the core of everything that we do. It's not just on technology, but wiring our people in the first instance. We're going to leverage group capabilities to efficient scale, and I'll touch a bit of that in the next slide. We're investing in digital leadership. We're building a whole new capability, adding almost 400 people into the digital channels to make sure that we can quickly conceptualize, partner, and deliver propositions. We'll optimize data and analytics. In the next 1 or so months, we will hire Group Strategy and Innovations Director, and this capability will sit under that resource. We're building on execution excellence. One of the items that makes me impatient is the speed of doing things. We will work to just make sure that the DNA of the organization is around execution. I believe that there are no better bankers than the people that work for KCB across the markets. What is going to make a difference is how fast we do the things that we promise we'll do. We're running a technology evolution, bringing everybody under T24, but also building best practice across our subsidiaries. But at the end of the day, we've learned lessons. The reason why we're talking about cleanup of a number of entities, including KCB Kenya, is risk resilience. We're not going to chase numbers. We are going to chase sustainability. The reason why we're having conversations around NBK and the history is that element of risk. And finally, we will be a sustainable and responsible citizen. Ladies and gentlemen, the last slide. I said I will not leave this without this podium without looking back and saying there are commitments that I made the last time we released the results, I think for Q3, Lawrence. And I've picked 4 of them because I need to look back and make sure that those commitments are made. Number 1, so I picked 4 of them. Number 1 is addressing funding for KCB Bank Kenya. We have approvals from both sides, KCB Kenya as well as those 2 entities, picking from EIB 115 million euros and from Propaco $95 million. That should fund KCB Kenya's growth agenda. Number 2, We've delivered what we needed to do for TMB, particularly on systems. But we've always said that we need to optimize BPR. And thank you again, Patience, for you and the team. You've deployed the omni-channels capability. Must be last week. Last week. That is what is going to unlock the rationalization of the network. So that we will be in space to do in 2023. I know you've done a lot already and closed some agents and setups. So like Lawrence always says, it's good to grow fat sometimes, but there are areas you should not grow fat. So I think BPR is very fat somewhere here, because we are number 2 bank up, then we are number 3 bank down. So we need to cut that Patience, right? And because I'm your board member, I know the commitments you've made. So we will use the omni-channel capability to deploy that. We've kicked off TMB integration with the deployment of T24 platform. That is in full gear. We expect TMB to be on the same platform with the rest of the group by January, if I'm not wrong, worst case scenario, David, yeah? And that should give us opportunity to do what we want to do. And we are aligned with the management and the board of TMB. Number 4, which is probably what you are waiting for. I promised that when I stand here that we'll have a conversation about NBK. We promise that we'll strategically resolve NBK. Between September to now, the group board has been going through an evaluation of the best of the options to resolve NBK. I am on record. I love this institution. We've demonstrated the cleanup that we've made around this institution. It's turned around very well. We've been hit with an exceptional case that then made sure that we were not compliant on capital. It is the duty of the group board to resolve those issues. To summarize, the group board evaluated 3 options, and the group board made a decision that to protect the value and the efforts we've put in NBK over the last 4 years, Lawrence, and given that we know what value it is, and I personally say, I love NBK, but divided attention is not going to help. I don't know how people who have 2 wives survive. The right thing to do, and for the good of all stakeholders, particularly our staff, is to accept a binding offer from Access Group, and that we will make formal, or have made it formal. The headline did not have the facts, but I'll just say the cleanup that we've done in NBK for the last 4 years has given us an opportunity to price NBK at 1.25 multiple of the book. That, I think, demonstrates the value of the institution. The hard work today, a round of applause to the board of NBK and management for the hard work. I don't think anybody would have given us a chance of that pricing had we not taken that hard work to do that. And I said that because people, and it's 100%, so that, I've been following Twitter, I'm on social media, because my staff and my stakeholders are on social media. In this country, particularly Kenya, anything goes. So let's just say 100% to Access Group, so that you don't ask me later at 1.25 multiple. We kick off the hard work today to make sure the transaction is successful. It will take us 6 to 9 months to close it out. and cross the line, but we give a predictable future about the institution and particularly our staff. I think it's important for me to mention that. And those 4 are broadly the areas that I committed that I'll come back to all of you. So the headline said revealed, now it's announced. We will work with the management and the board of NBK to protect value and to make sure that that multiplier gives us fantastic value by the end of the close of the period. I hope, and I'm happy to answer questions later, that rests the issue about the strategic resolution of NBK. After that, I'm sure the next is Giuseppe will get off the podium and let's look at the numbers. So Lawrence, it's your time to come up here and give us the 2023 performance and the 2024 outlook. As Lawrence comes in here, I'm one of those people who will say many thanks that 2023 is over for us, for some of the things, particularly on KCB Kenya, and absolutely bullish, because coming May is actually my 2nd anniversary as CEO. So I also want to make a commitment. May is a special month, isn't it, Lawrence? May is when we report Q1 results, and May is when we have AGM. So I'm making another commitment. So you'll see my last slide then, that there's no longer sins of our forefathers. It will be firing, because that will be my sin going forward. Thank you.
Good evening, everybody. Shall I give you a few minutes to let that last slide sink? So you want a break? Right, so I will deliver the numbers for 2023. I think both the chairman and the GCEO have set the scene in terms of the operating environment that we did business within our region. So I'll start with the balance sheet. Oops, sorry. So our balance sheet closed the year at, shall I say, a staggering 2.2 trillion in total assets. So far, of all the banks that have announced in the region, I think we remain first in the region to hit that mark. It was a 40% growth, largely driven by KCB Bank Kenya, and mostly coming out of the deposit franchise. You can see our deposits grew by 49% to close at about 1.7 trillion. We utilized those funds in investing in our core business, lending, with loans, net loans growing by 27% to about 1.1 trillion. And then we took opportunistic investments in government securities. As you saw from the slide from Paul, the rates were quite lucrative in some of our markets, and we took advantage of that. You can see our government securities grew by 34%, as did our short-term funds going up by almost doubling, 100%. Just looking at how that was split within the group, our regional businesses or subsidiaries outside of Kenya continue to do well. But on the balance sheet side, this time round, actually KCB Kenya is the one that had a very good growth. So you'll see, the proportion of assets coming out of subsidiaries that are outside of KCB Kenya was about 35%, which was down from the 37.5% that we had last year. If you look at the year-on-year change, you can see KCB Kenya grew 47% year-on-year. We have TMB at 39%. We've got Tanzania and Uganda down there, upwards of 50%. So we did have quite a well-rounded performance in terms of our balance sheet. Actually, our performance, and I don't want to take the sting out of the last few slides I will have, but our performance in 2023, I would say, was a mixed performance. Our balance sheet was really steaming. All the key measures in our balance sheet did quite well. When I come to the income statement side, you'll see those are a bit of a split between the revenue and the actual profitability. When just pulling out some of the key aspects of the balance sheet, gross loans grew by 24% to close 2023 at 1.2. This is gross loans. The previous slide was showing net. The key drivers from a sector point of view, corporate continue to be to headline our growth. We are a big bank with a big balance sheet, so you will expect that that gives us the capacity and capability to write bigger checks. So corporate did deliver about 146 billion in growth. Retail wasn't left too far behind, and as Paul mentioned earlier, we've sort of looked at our mortgage model, reintroduced that in the business to give it focus, and that has delivered about 14 billion year-on-year growth. Roughly the split between the currencies, our reporting currency is Kenya shilling, but we do carry about 28% of our facilities that sit in foreign denominated currency, which is predominantly the dollar. NPL continues to be one of the areas we are focusing a lot. In the year under review, we had a flat NPL ratio, closing at 17.3. The bad news is the value of non-performing loans did go up and closed at about 208 billion. The increase in terms of the NPL ratio by sector, you can see came out of SME and micro sectors that grew from 7.7 to 12.1. Good news is corporate is reducing their NPL for a very long time. It has dominated in terms of the NPL growth. That came down from 35 to about 29. The bad news is that it still continues to be the highest holder of non-performing loans. So that is a focus area, and I will show a slide later on that just talks to our strategy on how to deal with NPL. Of that growth, which is about 47 billion from 161 to 208. Those are big elements that came out of the slide or the weakening of the Kenya shilling. About 23 billion was driven out of just that translation, with the shilling losing about 28 to 30% last year. If you just do a like for like on stock using constant exchange rate, the year-on-year growth drops from 28% to 15%. We did see some downgrades, about 56 billion of downgrades, but equally we also did have about 40 billion of recoveries, upgrades, and write-offs. As I said, I will come back to some of the strategies that we will be employing. We have been employing and will continue to employ to deliver this NPL reduction. Splitting that in terms of the actual subsidiaries, you can see KCB Kenya and NBK were the key drivers for that growth. And in terms of the ratio, NBK was a leader in terms of the growth of NPL ratio, closing at about 25.3. Where does this NPL come from? Which are the sectors sectors within our business that are contributing largely to the NPL? The largest one is manufacturing, which is contribution of the NPL stock in our balance sheet is about 28 28%, followed by real estate. I'll take real estate, building and construction to almost together, and then we also do have trade. So a bit of representation of how the operating environment was. We do know that there's a substantial amount of pending bills that government hasn't paid, and that will have an impact on our NPL. We do know the environment was a bit inflationary. There was a scarcity of foreign exchange, so that has an impact on the working capital of a lot of our traders. So that you can see, represented in this sectorial analysis of the NPL, and this is for KCB Kenya. Coming to ECL, which is the provisions. Let me start by the headline, which is the total, stock of ECL grew dramatically by about 155. Sorry, I was just checking my notes here. Grew by about 155%, from 13.2 billion to 33.6 billion. That's about a 20 billion growth in just ECL. KCB Kenya contributed 81% of that growth of 20 billion. And we've just given a small waterfall to show what were the key drivers for that performance for KCB Bank Kenya. Again, we'll keep referring to the impact of the exchange rate in Kenya. So of the growth from 8.6 billion in ECL last year to 25.1, 11.7 was really driven out of the exchange rate. We did have, I wouldn't call that legacy accounts remediation, but we did have some, remediation strategy on some of our assets that didn't quite come through as we expected at the end of the year. That contributed about 7.3 billion. And we did have some good upgrades that, we wrote back some of the ECL we had taken in previous year, close to 4 billion. Coverage ratio, we've talked in the past about getting to about 70% of our coverage ratio. We are on track on that. At IFRS coverage statistic, our coverage ratio moved up to 64% from 51 from 44, that is the provisions, and then when you add the collateral, 64 from 55. So when you add the two, you can see that we are fully more than 100% covered in terms of our NPL, whereas last year we were just touching 100%. On the regulatory side, again, that also increased a bit slower than IFRS, but also that one we are within the we've covered 100% of the non-performing facilities when you combine both provisions and the collateral that we use as part of our accounting. I said I'll come to discuss some of the strategies we are employing in terms of actions on NPL. So the first one is fast tracking our ongoing recoveries. We saw in the year under review 2023, we had about 18 billion of recoveries. We also, as part of those recoveries, as we do that, it also has an impact on our what we call the statutory loan loss reserve, SLLR, where I come from. I have to say that a bit slowly, which reduced by about 17 billion. That basically releases capital to the business to be able to be utilized for growth. We will continue writing off accounts that have been fully provisioned, but that doesn't mean we will stop chasing for recovery. So that will help us in terms of how we manage the NPL and accounting, but we will still go up. We do have a division that does post write-off recoveries, and they do focus on that. In 2023, we wrote off about 8.6 billion. We'll continue disposing assets for accounts with high value collateral. And this is an area where I think from our strategy there was a bit, we did not get them as much traction as we expected to. And that's because a lot of the customers kept on running to court. So we've got a lot of court cases, injunctions after injunctions. But the beauty is that, it comes to an end at some point. And once we go through that judicial process, then we do know that we've got the right to the asset and we can dispose it off. Prudent loan origination. This is to ensure that whilst we are covering the end, the product of the NPL, we are not creating more of NPLs by how we do our loan underwriting and origination. And in the last 2 years, our migration to NPL has been a figure of just below 3%. So that talks to the process, the robustness of the process of origination that we are embracing. And lastly, what I talked to earlier on, just continuously engaging with government to resolve the pending bills, to facilitate resolution of the NPLs that are dependent on government contractors. We do have quite a significant value of NPLs that are waiting to be paid. They have delivered the work, they have borrowed from us, but they have not been paid. So, we've got to do the right thing. They have not paid us, we'll classify them accordingly. But we are hopeful that, with the pending bills committee, whose chairman is sitting in this room, we will, get some payments coming through to our suppliers, to our customers, and then that gives us the opportunity for them to be rehabilitated. Looking at capital, with the exception of NBK, and I think NBK has been talked about a lot today, so I will not get into it, but with the exception of NBK, all our subsidiaries are compliant on both the core capital and total capital. And that, with some of them like BPR having some significant buffers, because we believe that there's a lot of room for growth. The competitive nature of the Rwanda market, we have got to set it up for success by ensuring that they do have enough capital. We specifically showed Kenya separately. If you recall, when we began, actually same presentation last year, the buffers for KCB Kenya capital were very, very low, and it was a massive concern for not just the KCB group, but a lot of investors and analysts. We're happy to report that those buffers have improved, both at core capital and total capital. We are carrying about 1.3 percentage points in terms of buffer. However, we still believe that KCB Kenya is not yet where we would want it to be from a capital point of view. And it is for that reason that the board has decided we shall be holding any dividend payments out of the 2023 results. So this year, we want to conserve capital. We want to set up KCB Bank Kenya to be able to deliver very good growth in 2024. We've seen the environment in 2024, the first 2 months are quite, the operating environment is lucrative, it's conducive for business, and we believe that conserve capital so that by the end of next year, this year, same period next year rather, we shall be giving you some good news as shareholders and investors. Going to the other side of the balance sheet, looking at deposits, I did talk about them growing to 1.7 trillion. On this slide, I'll just want to focus on the mix, the deposit type. You can see in 2022, about 64% of our deposits were demand. In 2023, that has slightly gone down, and it's been taken, the movement has been taken over by savings. So savings has grown in 2023. Whereas term deposit and call have remained pretty much the same. So what this means is our cost of funds has gone up. So it's not only that the interest rates have gone up, but because the mix has also changed, for savings, you do pay some cost to it. And I'll come to that. Actually, the next slide does show that. So that has actually been the reason why our NIMs have shrunk. If you look at NIMs in 2023, as a group, we've closed at 6.6. In 2022, we're at 6.7. Despite the fact that the asset yield has gone up, the main contributor is the cost of funds in 2023 at 3.9, close to 4, pretty high. And the explanation you can see on the the table that is labeled interest rates trend. You can see on dollar or foreign currency denominated, almost 100 basis points increase. You can see, on 91-day T-bills, the massive increases across our markets, with the exception of Uganda that had a decline. And the interbank rate hits a high of 14.4 in Kenya. So that just tells you it was a very high interest environment that we operated in. The risk-based pricing came in. We are using it, but we are using it also very prudently, because you don't want to create a problem for our balance sheet again in about 15 months. There's only so much increase that you can put for the customers. If their cash flows do not support it, then you're creating a problem for the future. Again, also increasing interest rates is a lag. So the cost of funds comes in fast, and then you react and increase the rates. But it is one that we are managing very closely. Looking at the revenue now, on the income statement side, very good performance overall, 27% growth in revenues, largely driven by interest income coming out of loans, 45% increase, quite a substantial growth, because our as I showed earlier, our total loans did grow. Equally also, government securities, the investment we did there, 30% growth. So the income that closed at 42.7, interest income coming out of that investment, and service fee, more than doubled in 2023. There is the organic side of that service fee growth, which came out of our subsidiaries, especially KCB Kenya, and there's the inorganic side that came out of the acquisition we did in DRC. So TMB delivered a good service fee performance in the year. They do have a good franchise of products that they sell in the market. On the FX income, let me just answer the question that I anticipate will be coming. A drop of 2% in foreign exchange income. That is primarily driven by KCB Bank Kenya. In 2023, there was scarcity of dollars. So as a bank, we didn't have enough of the dollars to do the trading. But equally also, we did play the big brother role. Especially the first half of the year, we were trying to ensure that we do not play the role of exaggerating or increasing the depreciation of the currency. So our spreads were intentionally kept fairly low, hoping that the rest of the market will follow. Some banks did follow, others did not. But we took that as a conscious decision as a leader in the country, because we felt that was the right thing to do. Unfortunately, it has contributed to a lower income year-on-year comparison. But I'll also point out that 2022 was also an exceptional year, so we're also starting from a very high base. 2022 was very volatile. It's with the elections that were there. The base, the income, FX income that we made, especially in Kenya, I would say was one of those exceptional performances. Costs. So as the total costs have grown by 40%, as you can see from that slide, it's important to just sort of put some context around that. When we normalize the cost performance, so taking out one-offs, as I said earlier, we acquired TMB in December 2022. So we only had less than a month of costs in 2022, but in 2023 we've had the full year. So that is not a like-for-like comparison, and that's why we are showing it separately. In 2023, we also did have voluntary early retirement, which was not there the previous year. That cost us about 2 billion shillings. And we did have the one-off legal costs that hit our subsidiary NBK. So if you take those, strip those out, and you just do a sort of a like normalized comparison, our costs grew by 7%. But when you add those exceptions, which massive quantum, almost 20 billion of costs, then that takes our total cost to 83 billion, hence showing the 40% year-on-year performance. So coming to the outcome, final outcome of all what I've talked about in the income statement. Let me first just explain, this rather busy-looking waterfall. What we wanted to show there, what is being called PPOP, is not pop music. It's a pre-provision operating profit. I think that's what we put there. So we've sort of stripped out the provisions and tried to compare 2022 and 2023 pre-provision operating profit, and that grew by 16%, which demonstrates that the bank still has the fundamentals of the bank are still sound. Your balance sheet is still delivering into your income statement. And that's why earlier on I alluded that the income statement is also a tale of two halves. You have the top side, the top line that has grown quite well, robustly. But when now you bring in the impact of the provisions, which I'd explained earlier, that drops our PAT to about 37.5 billion. So when you just look strictly at the PAT, year-on-year PAT, we have an 8% drop. The key driver is really coming out of the provisions we took in 2023. FX impact on that, and also just the prudence of taking some of the part of the strategy of NPL, addressing the NPL full and final settlements, taking some haircuts, because we just wanted to clean up the book. So in 2023, we have closed as a group with a profit after tax of 37.5 billion. Just bringing that to look at the contribution from subsidiaries, almost 37% of PBT is now contributed by subsidiaries outside of Kenya. And I think Paul had shown the journey of the subsidiaries. From 2019, they were contributing only 2.8 billion. They are now contributing well above, well over 25 in terms of PBT, but at PAT, they are contributing about 21 billion. You can see the year-on-year change there. BPR, KCB Tanzania really did have a stellar year. Their balance sheet and their profitability was quite robust. Sudan was not left behind. Uganda, which I might add, I sit on that board. So Edgar, I'll take the thunder from you. Where is Edgar? Edgar, well done. Yeah, and the rest of the subsidiaries. So I think our strategy for portfolio, just taking a portfolio approach, de-risking Kenya from the concentration that we've had over the years, has come full circle in 2023. I would say without the regional businesses, the performance for the group would definitely have been worse than where we ended up. Looking at the ROE, this is, we put this slide because investors have asked us for many years, why do we take money out of Kenya and go invest in other markets where Kenya is not really fully mature? But then they were right, because 5 years ago, ROE for most of the subsidiaries outside of Kenya was single digit. This demonstrates that, that strategy is paying off. You can see if I just single out the new acquisitions, BPR 18.6, which is higher than what the group average is. If you look at TMB at 33%, well above what the group average is. So it is showing that the subsidiaries are returning to the shareholder the right level of return. So that's I think that is a fairly powerful slide. Our scorecard, what we told you we shall do, and what we actually did. And I'm not going to go through all of this. So let me just do self-reporting and deal with the red ones. NPL ratio, we had said a range of between 14 and 16. We've ended up above that, 17.3. I've talked to the strategies that we'll employ to get that back down. And as I show the outlook, you will see how ambitious and bullish we are on NPL for 2024. Cost of risk, 3.4. We had given a range of 2 to 2.4. The impact of the shilling made us continue making a lot more provisions, and that that number is actually a very strong outlier. Cost of funds, I talked to that, 3.9, and NIMs, I also did talk to that at 6.6. The others are green. I would say there are more greens on that scorecard than there are reds. But we would like to have a scorecard that doesn't have reds, and minimum should be a number, and that's what we are striving for in this year. Looking at the outlook, again, I'll be quite fast on this. As I said, we have been very, very bullish in 2024. We've been very ambitious. With the exception of the NFI ratio, where you can see our projection for 2024 is lower than what we achieved in 2023, and that is explained by the fact that for the Kenya businesses with a risk-based pricing, we are no longer separating lending fees from interest rates, so it's all combined. It is one. That lending fee element has now been dropped. We're not going to be reporting it separately going forward. Hence the reason why you see that figure coming down. You can see everything else, is ambitious. Cost to income ratio almost coming down from 50 to 44. NPL, as I said earlier on, from 17.3 to 13.5. We have our work cut out for us for sure to deliver that. But we do believe that we shall deliver that, and ROE getting back to the numbers that we as KCB are used to, around 25%. So I think that will be my last slide. I'll stop there and hand it back to Judy. Thank you.
Let's clap for Lawrence.
Should not hold out opportunities.
That was a very good presentation. And to share with us, I'm sure we all
Those
understood
are the
all
gateways to progress.
So we now want to get to the session where we'll have the Q&A, question and answer session. And before that, do we feel a bit tired? Can we stand up so that we stretch a bit? And then the people who are supposed to work on the stage, please, so that you can have our panelists going to the stage.
Those should not hold out
I can't
opportunities.
see stretching, so stretch a bit.
Those are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take those to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And those that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better. Doors should not hold out opportunities.
Okay, is the team ready?
Doors are the gateways to progress. The ones that hold ideas. Ones
Okay,
that
let's
hold
have our
the
seats.
key to equality.
Let's have our seats so that we can start.
Let's take those to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better.
So thank you. So we want to go to the next stage. So can we all sit so that we go to the next phase? So we are going to have Group CEO Paul Russo on the stage. We are also going to have Lawrence Kimathi on the stage, and also our Group Chairman on the stage. So I request those with the mics. The first person to answer should come from my right, which is on your left. Then the next one will be in the center, and then the last one on my far left, so that we have an opportunity for everybody. So whoever is with the mic, let's go to the far left and see who is the person who is asking a question. So anybody in the far left who has a question? Anybody in the far left who has a question, which is on my right? Anyone? Okay, let's go there to the center.
Good evening.
Good evening.
My name is Purity from Abojani Investment. I would like to congratulate the bank in the effort that they're putting to focus on stability going forward. I have a question in terms of the current strategy, the 2024-2026 strategy. I would just want to know how the SMEs are taken care of in that strategy, because I understand there's the digital transformation thing, and there's how the youth are catered for in that. But then in terms of the SMEs and entrepreneurs, how are they taken care of in the new strategy, or what is the plan going forward for that?
Okay, do we move to the next one?
And then, sorry, I have another one,
okay.
a second one.
Okay.
The group CEO mentioned something about a 360 turn in the mortgage, in the SNL. I'd like to know what informed that decision and what's the outlook on that going forward. Thank you.
Okay, thank you. So we have those two on SAB and on mortgage.
May I go next? Hello. My name is Duncan. I'm with Reuters. One question for Bona CEO. When you say the value of this deal is 1.25, the book multiple, can you give us an absolute number of that, or some sense of, even if it's a ballpark number? And then for Bona CFO, these are confirmation. Sorry, too many things were going on. I think I missed something. Did you say there are no shareholder returns for 2023, but you expect that to come back soon? Thank you.
Thank you. Julian Samboko here from NTV.
Okay.
Quick question. Could go to either Lawrence or Paul. Around the multiple for the sale, that price looks a bit steep from my assessment. Are you confident you'll consummate this sale at that price? Thanks.
Okay, so those are 5 questions. Do you take those first? Okay. Lawrence?
Yeah, I think the chairman has requested that I take the first, and then I'll throw Lawrence under the bus on the next 2. I think in terms of SMEs, and I did touch around the growth of SMEs, it's not a new focus across the group. It's been there. I think what we are asking ourselves is 2 things. One is, how do we digitalize both processes and those capabilities of deploying for SMEs, but also how do we bring enhancements of capabilities for SMEs as we bring them together. I think if you deploy technology and you also show up for SMEs on building their own capabilities, you can see the success of Flame, the women-led product. That is an amazing growth and amazing success for us. We've rolled it out across the group in a number of subs. I think Rwanda has gone live on that. Uganda has gone live on that. And how do we get that across to sorry for the men that are in the room. You women are really steaming ahead on particular in that support. I am going to bet on what solutions from a technology perspective and how we enhance their capabilities. I think quickly on the mortgage and 360, I mean it's 360. We split mortgage division, sent some colleagues to corporate banking and sent some of them to retail banking. But it's a specialized product, and it takes a long time to build those capabilities. And for you to actually say, I want to deliver super customer experience and customer excellence for that crew of customers that you want to take care of. And it's actually one of the most difficult decisions you make as a person when you are taking a mortgage. Then you are scattered around across the network. It wasn't working, and we don't believe it was going to work. Number two is there is opportunity for growth. And therefore, you evaluate where you are, what progress you're making or no progress, and you ask yourself why you're in that position, and you ask yourself what options you have. Basic, it's build that team, bring those expertise together into one house, into one coordination. The other point is, you've got to think about centers of excellence. So I don't have to rebuild centers of excellence across the region. There is a center of excellence and capability that KCB Kenya has built for a long time. How do you make sure that that is available for reference for product development and serve across the network? We made that decision to make that 360 degrees. Like I said, collectively, we were in the teams that made that decision, and we're in the teams that made the decision to reverse. Obviously, for Kenya, there is obviously the affordable housing discussion that is going on. Those teams are going to be a critical setup for us. So over to you, Lawrence, on the other two, and happy to chip in.
Yeah. Thank you. So on the multiple, you're asking about the absolute number. So the absolute number will be the multiple multiplied by the NBV. So the NBV at the time that we'll be closing, we've got 6 to, I would say maybe 3 to 6 months reasonably to close this. And obviously, once we get there, we've got this year with NBK as our subsidiary. We believe we are creating value in that time. So you can take a computation based on the results we've announced today, but what the actual absolute number will be will depend on what the NBV net book value figure will be at the time that we close. I didn't say there'll be no returns. I said there'll be no dividends. As you've seen today already, just the announcement has created quite some good returns on your share price. So as part of the total shareholder return, there's a share side, the share price side, and the dividends. And the dividends is to protect capital for KCB Bank Kenya. Julian's, we actually could have gone for more. You say 1.25 is steep. We were pushing for more, but we needed to close. So the binding offer has been signed. We believe that yes, we shall, should be able to close at that multiple.
Okay, let's have another question on my far right.
Eric Mokaya from Wango Capital. I have a couple of questions. So one is, what's the current exposure to GTG, and what is the impact on the bank from the portfolio being unwound and then the appreciation of the Kenya shilling? And then secondly, on the NPL cover, I think the dark cloud around KCB is the NPL. So does the 50% cover seems a bit low? So if you understand the bank's position on having sufficient collaterals, and then the real estate market seems a little weak. So given that it's 3 months into 2024, what's your assessment on the need for additional provisioning this year? And then finally, on given that you're quite bullish going into 2024, what's the need for the lack of dividend this year, given that you also expect a little bit of a windfall from the sale of NBK? So should shareholders have that expectation built in going into 2024? Should you close the deal by the end of this year?
I'll cover the NPL coverage dividend outlook, and I think I saw, as Paul says, there's no free lunch. I saw John Okulo around. I will throw the G2G question to him. So yes, NPL coverage, we've talked about our ambition to get to 70%, and we believe that this year gives us when I say this year, I mean 2024, gives us a very good platform to get there. We did talk to, the stabilization of the shilling, and we expect that to continue. The fundamentals and the sentiment in the market seem to suggest that the shilling will stabilize around where it is. That gives us impotence and opportunity for us to build up our provisions to the 70% target that we've talked to. I think that question on coverage has come a number of times, and we have said we will get to the 70%. In terms of dividend outlook, we traditionally have done in the past paid an interim in December, but that is usually dependent on the performance of the bank up till, especially we look at the half year, or at times we do look at the first 9 months. So depending on how we perform, I would say either by June or by September, we shall take a decision on whether to pay an interim or whether to hold it until we pay a full lump sum at the end of the year. Windfall gain from NBK. Let us close the transaction, and that will tell us whether there's a windfall or whether there's none, and then we'll take that decision. Again, it will be collectively as part of the performance for the group as a tough year or the first 9 months. John? Did you get the questions, or can I repeat?
Yes, I believe I got the questions, and thank you, Lawrence, on G2G. So as a KCB Bank Kenya, we control about 70% of the volumes of petroleum imports through the G2G structure. And so the value that we hold depends on the value of the respective cargoes. If or when G2G ends, effectively what will happen is that the structure of importation of fuel will move from the current arrangement, whereby fuel is imported on 180 days LCs, to importing based on 30 days from delivery. And before G2G, we did participate in the OTS system. So if the program was to default back to the old system, then we'll continue to participate in the same manner. Thank you.
Thanks for that. Was there another question which was pending? No. So we go to this side. Can we have a question asked? Anyone with a question? Okay.
Yeah, good evening, Florian Witt. I'm Executive Director at Odo BHF, which is a bank from Europe, not an investor, not a journalist, however, a stakeholder, because we are a correspondent bank to KCB, and we are proud of being it. And I think today's result confirmed to us that we should continue to be proud of being one of your correspondent banks and supporting trade finance. My interest today, and I take privilege of raising this question to you, we are of the opinion that BPR acquisition and Trust Merchant Bank acquisition was a very good deal because we know both banks very well. We think that follows a good strategy. Question is the regional expansion thereby fulfilled, or do you have more plans to expand outside the region where you are currently engaged? Thank you.
My name is Ochieng Olo, Think Business. Now, I know that Mr. Russo spoke about the board meeting and deciding that the best way out for NBK was to sell it. I'm wondering if this was really the best time, given one that NBK had just taken the hit of 2.4 billion, the legal liability. Wasn't the only way up for NBK, wasn't the only way for NBK up? What if you waited another year or two? Would it have made a difference? So I don't understand really why that decision had to be made that way. I know, Paul, you said you promised. You're keeping your promise. Now, my second issue on that is that I'd like to know just how much, really, There's a lot of speculation about the amount of money that KCB has put into NBK to keep it running. What really is the total amount that you have put into NBK since you acquired it to keep it running? And looking at what you are likely to get out of it when you conclude the sale, what is the net impact? Will you have spent more money than you are likely to get, or what is the net effect? Thank you.
Yeah, thank you. I'll take, thank you for your compliments. I'll take that question, and thank you for your partnerships and the opportunity to do trade business with yourselves. In terms of expansion, we've been very bold to say we know that the regulations that are being reviewed in Ethiopia at the moment is the only market that as a group, you know, we've looked at and holding for the regulations to change. We know the risks that are there, but if it opens up, it's one of those that might be under consideration. If you look at our 2024-2026 strategy, it's about getting value and consolidating in the markets that we're operating in. I would always say, if you want to be not markets but opportunistic in terms of any digital capabilities that brings in new different competencies, maybe, but not markets. And I hope that answers your question. You saw my priorities: get TMB on board, start getting value, deploy group capabilities into DRC to get value of it, optimize BPR with the new capabilities. Those are priorities for us. While we've announced an NBK sale, the next 6 months, 3 to 6 months, Lawrence believes we can close in 3 months. Hallelujah, I pray. In 3 months, you know, I said 6 to 9 months. That is going to be intense and will require a lot of executive time and input. So those three, if you ask me what will take my focus, those three, I just believe that KCB Kenya is running in 2024. It will take little time off, particularly the group execs. Those three will be our focus points. Getting NBK to close, BPR and TMB. Hopefully that answers you.
Okay.
Cheng, I think if I look at, I mean, there are many factors you consider when you're making that call. There is advantage of being in the room and looking at all the options and evaluating those options and turning it down. The pros and cons on all those options are things that the board considered, and you know, chairman can also make that comment. There's never perfect timing. Like I said, I'm one of those people that I've run NBK. I know NBK inside out. I love the brand. But you've got to be able to say, because there are two entities, and I'm now speaking as Paul, there are two entities that are systemic. You've got to think about how you resolve that. You know, decision by the courts demands, you know, capital injection. If you estimate that, it looks like around about 5 billion to 8 billion that you would need to put in there if you work out the numbers, both for compliance and for growth. You've got to think about other stakeholders. I've pointed out around staff and quite a number of that. Without going into details, the group board considered all those three options and made that call. I think Lawrence can speak to the numbers if you want, you know, in terms of what we've put in and what, I mean, we would want to get value out of the cell. At the end of the day, tough as it may be, we believe that we made the correct call. I like Julian's saying it's steep, so I must thank the team that negotiated to get to that level. And Ocheng, we've been on it for 6 months, so I'm not just keeping my promise. It's not about Paul. institutions, will be there post us. We've been at this for 6 months. So it's an outcome of 6 months' work. But Lawrence, I don't know whether you want to speak to I know that slide from what is his name?
Morris.
Morris is clear in my mind of those numbers.
Yeah, so Ochieng, first, I think you should not be speculating because the numbers are very clearly stated in our integrated report. If you go towards the end of the integrated report, you will see KCB Group's investment in NBK. That is the money we have put in NBK. So that number is very clear there. It's about 14 billion. Yeah. What would be the likely outcome? It's dependent on a lot of factors. As I said, when we close, how much value will we have generated, NBK will have generated between now and then. There will be a completion audit. Are there any adjustments that will need to be done? So it is a moving target on a monthly basis. But from the review and forecast that our deal team coming from our transaction advisors has done, it is going to be a positive number. Yeah.
Hello.
Thank you.
Yeah. Maybe I can on that issue of NBK, ladies and gentlemen, as Paul has indicated in terms of timing, looking at the journey we have walked, and I can also assure you the technical team, both financial and legal, they have looked at even some of the concerns, like the question that was raised by this gentleman, because we also are conscious and would want to ensure we do what is in the interest of not just KCB as a group, but even the country. So I assure you, this decision that has been arrived at is going to be a decision that is more helpful. If you recall in my statement, I did mention some steps we have taken and some of the gains we had gotten because of NBK. All these were eroded, which means we may continue thinking that maybe in 2-3 years' time, that's when you resolve, only to end up in a situation which is even more grave. Timing that has been done is the right timing, and is going to be helpful to you as the investors. It gives us more positive view of how we see 2024 and going beyond. Asante.
Thank you, Group Chairman. I'd like to bring this now to a close. The panelists will be here. I'd like to ask the photographers to come and take the photos.
Just one. Where's Tony Muliza? Allow me to introduce, I know you've met many executives. Allow me to introduce Tony Muliza. Tony Muliza is our new group treasurer. Tony, it's a new role. We promised as well that the last time. So Tony will take charge of group treasury, across the markets that we operate in. And that will give us opportunity to leverage on the capabilities of Tony. So Tony, thank you for joining. My apologies, I failed to introduce you.
Yes, so I'll bring it to the close, but the GCO group chair and also, yes.
I just plead with you, nisaidie tu niongee kidogo, alafu ufunge. Tuko hapa.
Okay.
Tukusupport.
Basa tu tumeenda, but sawa.
Asante. Umenipatia nafasi?
Okay.
Thank you very much, Judith. Group chairman, group CEO, group head of finance, all the board members from Tanzania, Uganda, South Sudan, Burundi, and Rwanda. Today, we have seen you are improving in the announcement of today. But Chairman, I know you from long time. You are a committed chairman. Since you started from Treasury, our group CEO is very committed. Since he was in the accounts, our our head of finance is very committed in KCB. Now, my comment is this. We shall give you a chance to commit yourself, dedicate yourself all over. I know they are represented from our sister countries here, and our board members are here. So we shall give you a chance to improve on bringing back to the shareholders something in future. I know today there's no dividend, but it is not last. This is just first. When there's no dividend, it's not last, this is just first. But we see you are improving in most of your announcements you are made today. So shareholders are supporting you. While we are supporting you, go back, sit, be committed, and have confidence that shareholders are behind us. So that means you will work freely, and you will be committed, and you will do something, and you shall get returns, good returns. I think that is all. Thank you, David. Asante sana.
Thank you, Chairman.
Bibi hawa makofi. Bibi hawa makofi sana. Good, Chairman. Thank you. Asante.
Thank you, Chairman. So now we come to the end of our program, and I'll ask the media who are supposed to do the interviews with our CEO and also our finance director to be ready so that this can be done now. But before they leave the stage, can the photographers come now and do it before they leave the stage? But thank you all, and I'll bring this program to a close. And thank you for coming.
Doors should not hold out opportunities. Doors are the gateways to progress. The ones that hold ideas, ones that hold the key to equality. Let's take doors to places where there are none and bridge the distance by connecting the past to the future. Let's open big doors and small ones. And doors that expand your horizons. And those that close deals. Let's open big doors that harbor progress in all the places that we are, at all times that we can, for as long as we can.
KCB ni yetu.
KCB ni yangu. KCB is mine.
KCB ni yetu. For people, for better.